Good day, traders. Mindset reset. It's been a few days since I've did this. It's been a pretty hectic week and had lots happening here. And of course, everything keeps ticking over in the markets. Today, we're going to be talking about the 3-day cycles, and we're going to clarify some things. I know we went over that in the video on the charts, and I will do the same thing again. I'm going to really sort of focus in on I think conceptually traders understand there's a 3-day cycle, but they might not have connected all the dots. We talked about the levels, high of day, low of day, closing price, being very specific in terms of where the market will trade from. And then weekly high, low, weekly close. And the same thing can be applied at the beginning of a new month also. But the 3-day cycle is this: Monday, Tuesday, Wednesday, day 1, day 2, day 3. Now, day 2, I've talked about in the past, is often a day where traders can get chopped up on. And I want you to go back and understand the nature of hunting out, whether it's a 3-session parabolic or a 3-day parabolic. Session 1, Session 2, Session 3, day 1, day 2, day 3. You'll either get a parabolic trend trade that blows off in the direction of that creep. So an excellent question from a trader was, do I still use initial balance? Of course I still use initial balance. That's part of the opening range. Initial balance forms our box. And so, as Paul Tudor Jones says, if a market's giving you an indication of a potential range expansion, don't try to counter trend that. Meaning that if we get a higher high or a break of a level that doesn't break out, so on a Monday often will be a narrow range day unless we break out of Friday's closing range, and we can get a higher high or a lower low, but it stays inside of the box. But that gives us an indication of a potential direction, and that's where closing price, high of day, low of day come into play, and the timing window for the session that you are trading. So day 1, day 2, day 3 may blow off in the direction of a move, say for example on, let's say, the Japanese yen. I come to the US session though, and it's already gone vertical, and automatically traders think that because it's gone vertical, it's broken out, they want to counter trend it. So I want to come back to understanding the power of day 3 and hunting out a parabolic opportunity, because there will be opportunities in other instruments that are either going to give a parabolic reversal, day 1, day 2, day 3. Day 3 longs may be caught jamming in to closing price or high of day for a vertical move. Maybe there's red news. We saw parabolics on several instruments this week on day 3. Day 3 resets on Wednesday. So there's no confusion. If you're confused about Monday, Tuesday, Wednesday, think simple. Monday, Tuesday, Wednesday, day 1, day 2, day 3. Wednesday resets and becomes the new day 1, day 1, day 2, day 3. Now, this is where traders get messed up. They're looking at an instrument and trying to follow it and guess, oh, it's day 3 longs, and they try to short it and all these things, but they're missing the point that on day 3, when it resets, it might go day 1, day 2, day 3, and it might give a reversal on day 4 in the Asian session or in the London session, first red day, first green day, if it's going in the long direction. And then, of course, on Free Cash Friday, resetting Wednesday, Thursday, Friday, they may get a first red day, high of week, high of day short trade, or they may get a parabolic that goes back to the high of the week. So understand 1, 2, 3, 1, 2, 3. Then you're hunting for the instrument that gives you a parabolic setup. Now, if you're following an instrument, for example, Canadian dollar, day 3 longs. Now, it's still on the front side of the move. It may close as a first red day heading into non-farm payrolls. Was there a better setup somewhere else? But I'm aware that day 1, day 2 was day 3 longs up high at the end of the week and could potentially now close as a first red day. But I'm not trying to short that until it gives me a parabolic setup. So it's like going long on gold. You're still trading into a falling market, and you're hoping for a parabolic move on day 4 heading into a non-farm payrolls Friday. Go back, study your non-farm payrolls week. I've said this, I said it at the beginning of the week. It is not unusual to have a 4-day template, meaning day 1, day 2, day 3, day 1, day 2 heading into non-farm parabolic free cash non-farm payrolls Friday. But if you make it so simple, 1, 2, 3, 1, 2, 3, and then find the instruments that are offering you a parabolic either trend trade or reversal trade. Some of the markets are not going to be ideal because guess what? They're going 1, 2, 3, no ideal best trade candidate, and they don't look at it anymore. They're still trying to counter trend it. They get chopped up on day 2 and they miss the parabolic trade going the other way on day 3 on Free Cash Friday. Front side can be choppy and messy, or it may move in other sessions, but on Free Cash Friday, it may give you a perfect 5-star scalable opportunity. Day 1, day 2, day 3, day 1, day 2, day 3. Day 3 could be the elevator. Day 1, day 2, day 3, the escalator. Maybe even day 4 is the consolidation, the choppy market, the narrow range day, first red day, first green day, whatever that may be. I am only ever looking at Monday, Wednesday, Friday templates, but I'm aware of where those opportunities are potentially building. I said this also beginning of the week. Look for backside opportunities in Asia and London. Why? Because there's no major red news. And when they get a lot of US major red news, guess what that potentially may be doing on the front side of a move? Building order flow in a choppy, wicky, hard to trade market for a vertical parabolic on the backside day 1, day 2, day 3. Think about that. That's why it's easy free cash when they build up choppy order flow and they have news and they've got all that stuff heading into non-farm payrolls. I just sit there and wait, as Jim Rogers says, until there's easy money laying on the floor in the corner. And I mean that. I've reinforced that. But if you make this so simple, day 1, day 2, day 3, day 1, day 2, day 3, you will be in some huge parabolic trades. And those trades go vertical fast. And when you're sizing into those, your account can double fast. So the big thing about that is that, again, as I said in the video, high and low closing price of the week, high and low closing price of the day. Can't dispute that. 5 o'clock New York close charts. That's what I use. Whatever you use, if it works for you, use that. But that's what I use. Timings. The timing is concrete. And then those levels, when the timing window kicks in, day 1, day 2, day 3 parabolic opportunity, I'm hunting for where the best trade is. And as I mentioned earlier today, sometimes I'm just a bit, I miss a few little details and miss the best trade candidate. I just, it's not switched on in the morning. Maybe I'm just too fixed on looking at gold or looking at, one of the indexes or something, or scrolling through the currencies, and I miss a really obvious, super clean trade. Sometimes on the backside, I kick myself. In Asia, there's, I think I traded gold yesterday, and without a doubt, I think Euro Oz was probably, Euro Oz, Pound Oz were easy free cash day 2s on the backside. 75 pips vertical, like just easy money. And that's what I mean by understanding the power of the parabolic, not trying to trade every day and get a move. Save your bullets, and then understanding when a market is rolling over to either go back in the long direction or the short direction, but it is going to wipe out a whole day's, maybe 2 days order flow, even if it comes back. Japanese yen, do you think that was an accident? Go back and look at that, 300 pip move, 400 pip move. Bank of Japan, but guess when it started? Friday, failed peak formation. Day 1, day 2, day 3, high of the week, broke down after 10 a.m. news. It was already in the short direction, and it wicked down 300 and something pips or 400 pips. Day 1, day 2, day 3. There is no accident to any of that. It is an organized, it's measured, it's timed, it is well constructed. There is no accidents in these markets. Go and look at closing price. Somebody asked, I still don't see the relevance of it. You need to go study that. You need to understand day 1, day 2, day 3. Often on a day 2, closing price will be 50% of the range of the high and the low. Go check for yourself. We'll often see the closing price of a week act as a magnet level. The closing price of a day act as a magnet level. Day 3 will often act as a ceiling or a floor when there's a parabolic opportunity setting up for the closing price. There are so many simple trades. If you step back and look at Monday, Tuesday, Wednesday, and you don't see it in the session that you're trading, Don't try to trade that. Look for the one that's set up for a parabolic, either trend trade or reversal trade. If you can't find it, think backside, because one sizable 5-star parabolic setup will wipe out 10 little waste of time, stressful little scalpy little, tiddly bits. Those trades are over and done with fast. They explode. And some of them, as I said, on the backside in Asia, 75 pips in probably 30 minutes, 30 to 45 minutes. Okay. So think how you can make real money in the markets, not these little swings and chops and bings and bangs and, whatever. That to me is like, it's day 1, day 2, day 3, escalator, elevator, and it could be escalator, vertical blow off. Day 3 can blow off in the direction of the trend. Oil made some people wealthy this week. So did gold. But those opportunities are there every single week. And guess what? Monday, Tuesday, Wednesday, Thursday, Friday. That's simple. There's no confusion. You might have day 3 breakout traders in the market. You might have a 3-day setup within that Monday to Friday template. Tuesday, Wednesday, Thursday. Guess what Thursday is? It's day 2 heading into the closing range of the week. We can see that form a first green day or a first red day for a parabolic move on Friday. Okay? Think simple, step back, look at the templates, stick to the timing windows, high day, low day, closing price, manage yourself, understand when those opportunities are there. Do not counter trend markets that have not yet set up for a parabolic opportunity. Catching the low or catching the high is not, to me, unless it's a specific setup after a blow off, okay? You're getting in front of a market that is not yet to go parabolic. If it's day 3 blows off, 1 hour, 2 hours, 3 hours, or at the high of the week, high of the month, whatever, and we got they're going to collapse and fall right through the floor for a measured move, that's an entirely different setup. But we're talking about just blindly getting into something and trying to buy the low or sell the high. You will get smashed by some of these markets. They will blow your account out. And as I mentioned over and over again, you make money on the days that it is easy to make money on, a lot of money. So study those templates, traders. It makes it easier to step back and just go, you know what, looking for a better one, looking for a better one. And when you see it, or when you see the setups and you see them enough times, you can just start to scroll through. And as I said, you might not get the best one, but if you have a parabolic setup, even when you have a poor quality instrument comparably, you'll still make money. That's the best part. Have a great day, traders. 1% better. We will have more templates up. We will study this in depth, hammering it home. Love you and appreciate you. Have a great day, and may the markets go with you.